Did you know the average person spends $525,000 in taxes in their lifetime? This is something that we cannot allow to happen, especially if we're thinking about investing and retiring in the future. So in this video, I'm going to give you 4 tax advantage accounts that you definitely need to have, because spending $525,000 to the government on taxes is something that you don't want to do. You want to reduce this as much as possible, and here are the accounts that are out there by the government to allow you to take advantage of, to save on taxes, and to invest in your future. Now, the first account that everyone needs to have, and if you're eligible for it, is a Roth IRA. With a Roth IRA, you put money that's already taxed into the account, but this is where the beauty happens. All the growth, everything that happens within that account, you get to keep tax-free. After 5 years, you can withdraw from this account and it's all yours. Currently, the limit per taxpayers is $7,000 a year. Now, there's an income limit per couple or per individual that you definitely need to be aware of, but if you are below that, you certainly want to invest in a Roth IRA to save you so much money on future taxes. And the next account, which most jobs offer this, is a 401k, a 403b, and a 457. This one is pretty straightforward. You get a tax deduction today on the money you contribute into these accounts. A lot of companies offer a match, whether 50 cents to $1 and $1 for $1, which is even better. You can get this account to grow to large amounts if you take advantage of that contribution. Now, unlike a Roth IRA, this is an employee-sponsored retirement account, which means you cannot get this account anywhere, only if you are employed and with your employer if they do offer it. Now, unlike the Roth IRA, you have to wait to the retirement age in order for you to make withdrawals, and the withdrawals you make in the future will be taxed. But the thing is, right now, you might be paying more on taxes because you're having a higher income. In the future, hopefully your tax rate will be a lot lower because the amount of money you need to withdraw from that account and your tax rate will be lower. And the next one, which people now have been talking about and people are catching on and understanding how beneficial it is to have this account, is a HSA, which is a health savings account. Now, this account is extremely unique. In order to take advantage of this account, though, you will need to have a high deductible insurance plan. That is the only way you could get a HSA. And the money you have within this account is used to pay for medical expenses. And it's not like a typical savings account. You can take this money in this account and also invest as well. And all that growth you can use for your future health benefits. So the reason why this account is so amazing is because it has 4 tax advantages within this account. Number 1, 100% of your contributions are tax deductible. So any amount of money you put into this account, as long as you don't go over the limit, will become tax deductible. Next, when you withdraw money from your account, that as well is tax deductible, as long as it's used for medical expenses. The next advantage is all the interest that you get on your account is tax deferred and you get to keep. Which leads to my last point. You can spend all the interest when it comes to your medical expenses in the future, no tax penalties. So it's a 4-way advantage to have this account. And we all know when we get old, we're gonna have some medical conditions, or hopefully we remain healthy, but you still gotta take a trip to the doctors, and you can use this account to pay for it, because you're gonna be self-insured most likely, especially if you follow this channel, you become rich, you become wealthy, and you will need an account like this to cover all your expenses. And the last account is the brother to the Roth IRA, which is a traditional IRA. With a traditional IRA, the money you put into your account today is tax deductible. And also, the big difference between a Roth IRA and a traditional IRA is the income limit is not set for a traditional IRA. If you do not have the ability because you make too much money to contribute to a Roth IRA, it's available to anyone who's a taxpayer. Now, there is a way for you to invest in a Roth IRA if your income exceeds what the Roth IRA allows, and it's called the backdoor IRA. So what you do is you open up a traditional account and you put $7,000 into that account, because that's the max limit that you could contribute to a Roth IRA, and simultaneously convert it to a Roth IRA. So as you see, you're backdooring into a Roth IRA. Is that illegal? No. It's a loophole and it's allowed, but it is trying to get blocked. So I recommend anyone out there to try to take advantage of that, and speak to your tax accountant before you make that move, because there is tax complications when you do that, because you're gonna be paying taxes up front in order to get it invested. But the good thing about it is it's gonna grow in the future and you get to withdraw it and enjoy all that money paying no taxes. So there you have it, guys. Don't be that person that spends $526,000 in your lifetime and you end up broke. Take advantage of all these accounts. It's not tax evasion, okay? This is tax avoidance. There's a big difference. These are implemented by the government to entice you and give you the benefit to invest because they don't want you to be relying on Social Security, okay? And you don't want to rely on Social Security. So take advantage of these accounts and you would definitely be wealthy. Don't forget, guys, to hit the subscribe and the like, and catch you guys on the next video. Peace.